What is a real estate contract, Tego?
Yeah, so real estate contract is actually the document, the vehicle for spelling out the terms on a seller financing deal, meaning the owner, the seller sells the property, but instead of just taking the cash out from the property, they take payments, and it could be an interest rate with certain terms, certain amortization schedule. So
owner financing is just another tool and a way for a seller to have an opportunity to sell their property, right? So it's just an option. You can put a property out for sale using conventional financing, FHA, VA, cash, but you could also do owner financing. So owner financing arrangements, Tego, like you just mentioned, don't have specific requirements per se like getting a regular loan, right? So we can think of like a lot of things are credit scores, debt to income ratio, underwriting requirements, all these things that when you get a regular loan are taken into consideration. But
Sure.
with owner financing, a lot of times those things aren't in play. There's not a general guideline. Owner financing arrangements can be used for an owner-occupied property, residential, commercial, or even raw land, right?
Very common with raw land, because many times for raw land, especially undeveloped raw land, meaning there's no utilities or anything on the property, you really don't have an option for bank financing on that.
There's some out there now, but it's not necessarily the best, right?
Yeah.
So borrower and seller can come to agreement regarding the price of the property, the time of the loan, the period of the loan, the down payment, and the terms regarding the agreement. So the terms would be the interest rate, when the note would be due. So it's great, but there's no mortgage insurance on it. Lots of reasons why it can be a good option. So Tego, why do you think somebody would want to consider selling a property and offer owner financing or a real estate contract?
Well, it's actually a very solid long-term investment if you are somebody that doesn't need to have all the cash out from your sale of your property. It's a great investment. So let's say you have a $200,000 property, and you can earn 6, 7, 8, 9% interest on your sale of that property. That's a pretty darn good return on your money.
So for some people, rather than sell the property and have the money and not know where to invest it because they don't need to put it in another home, they might say, well, I can put it in a bank or a CD or something at 0.5% interest, or I could be the financier of this property and get 6, 7, 8, 9% interest, whatever people agree to, right?
It's actually a pretty popular investment for savvy investors that are looking for a place to park some money. They will actually even buy the loan from somebody and just have it as a long-term investment. Very common to buy real estate contracts from somebody that holds it and just take over that basically cash somebody out. I'm confusing
You're
it
way
a little.
ahead
I
of
know.
me here.
I know. Okay.
So